Dinar shift. The world of international finance is a domain often characterized by open announcements and clear statements, yet sometimes the most profound changes begin not with a bang, but with a barely perceptible whisper. Tonight, we turn our attention to one such subtle development currently unfolding around a major U.S. financial institution, Chase Bank, and a foreign currency that has long captured the attention of a passionate community, the Iraqi Dinar. Specifically, a quiet but distinct focus has been placed on the 25,000 dinar note, a development that seems to contradict the public stance maintained by major banks for months. This discrepancy between the visible corporate face and the internal machinations is a classic sign of preparatory work being done well away from the media spotlight, suggesting a measured approach to a potential shift in the currency's status. The core of this story is the silent preparation, the internal due diligence that precedes any market-moving decision in the highly regulated banking world, where caution is the ultimate priority and readiness is paramount to managing financial risk. The public face of Chase Bank regarding the Iraqi dinar remains unchanged, a fact easily verifiable by looking at their official currency exchange lists. There is currently no active trading listed for the dinar, no official press releases to announce a policy shift, and no revised public statements suggesting an imminent change in how the currency is handled. This steadfast silence from the institution is precisely what makes the reported internal activity so intriguing and noteworthy for our viewers. However, beneath this calm surface of public dismissal, a palpable shift in internal focus seems to be occurring. Indications suggest that internal compliance teams, those departments responsible for ensuring adherence to complex international financial regulations, have been dedicating resources to reviewing systems related to the Iraqi currency. This kind of behind-the-scenes movement, involving technology updates and proactive reserve monitoring, signifies a strategic preparation. In the rigorous world of high finance, a true pivot in strategy seldom starts with a press conference or a public announcement designed to influence the market. Instead, it typically begins with discrete, methodical movements within the financial infrastructure of large institutions. Over the last several weeks, information filtering in through private banking channels and compliance contacts points toward a systematic review within Chase Bank concerning various restricted foreign currencies. The Iraqi dinar is a standout among these reviewed assets. The 25,000 dinar note, a denomination that Western financial entities have historically viewed as challenging to manage due to perceptions of illiquidity or impracticality in major international exchanges, is now drawing specific, renewed scrutiny from the bank's currency compliance specialists. This targeted interest in the higher denomination note is a significant detail, hinting at a change in risk assessment and a growing acknowledgement of the currency's potential future role. The critical question for all observers is why this sudden, albeit quiet, increase in attention is happening now. The answer appears to be rooted not in speculative chatter or unconfirmed rumors, but in the tangible and dramatic structural reforms undertaken by Iraq's Central Monetary Authority. Over the past 2 years, the Central Bank of Iraq has engaged in a focused effort to overhaul and modernize its financial framework. This includes a clear commitment to improving transparency in operations, implementing tighter controls on currency outflows to prevent illicit transfers, and substantially strengthening digital controls to align its banking practices with robust international standards. These concerted and verifiable efforts to stabilize and legitimize the Iraqi monetary system are the likely catalyst for the internal reviews being conducted by major global banks. For a colossal financial entity like Chase Bank, which maintains substantial international dealings, including significant exposure to large corporate clients operating across the Middle East, being prepared for any major policy shift in regional economies is a non-negotiable part of its responsible risk management strategy. If the monetary policies being advanced by the Central Bank of Iraq continue on their current trajectory of stabilization and reform, the logistical path to re-establishing a recognized, tradable international exchange channel for the dinar could transform from a theoretical possibility into a genuine practical reality. The objective for Chase, therefore, is not to forecast an exact date, but to ensure operational readiness, positioning the institution to adapt seamlessly should a shift occur. This proactive stance protects both the bank and its clientele from the market shock of being unprepared. Inside the operational headquarters of Chase Bank, these systems reviews are considered routine aspects of international banking, yet their current focus and intensity suggest something far more significant than a standard audit. Before any large financial institution commits to listing, adding, or reactivating a foreign currency for exchange, an intricate array of internal systems must be meticulously updated and aligned. This essential process involves updating specialized transaction codes, embedding new anti-money laundering (AML) compliance protocols, recalibrating internal rate calculators, and ensuring all data reporting mechanisms are compliant with regulatory bodies like the Federal Reserve. Quietly initiating these systemic updates does not constitute a public commitment to open an exchange desk immediately, but it is an undeniable signal of a fundamental change in the bank's strategic outlook and mindset toward the Iraqi dinar. This phase of silent, thorough system overhaul demonstrates that a major financial player is actively working toward a state of readiness, mitigating the potential for last-minute operational chaos. The institutional goal is to avoid the scramble and potential regulatory pitfalls that come from being caught off guard by a significant market event. This pattern of preemptive, quiet infrastructure preparation is not unique to the Iraqi dinar. It is a familiar blueprint observed in other emerging markets that have successfully integrated into global financial systems. A prime historical example is the period when Vietnam embarked on its significant banking modernization drive. Major U.S. and European banks undertook similar internal preparation work, quietly refining their systems months before any new trading windows for the Vietnamese currency officially opened to the public, underscoring this tried-and-true operational sequence. The observed pattern of financial preparation typically follows a clear sequence: an initial period of absolute silence regarding public information, followed by subtle internal testing and system adjustments, and then, much later, public confirmation once all compliance and operational checks are complete. Chase Bank's current behavior, characterized by its public silence juxtaposed with private technical reviews, aligns perfectly with this established pattern for anticipating an emerging market currency's reintegration. The particular focus on the 25,000 dinar note, the highest denomination, carries considerable weight for the community that has followed the dinar story for years. For many who began engaging with the Iraqi currency market following the political events of the early 2000s, this note became a powerful symbol of their holdings. For years, many investors were met with skepticism, told that their holdings were functionally illiquid or meaningless because the Iraqi currency was considered too heavily managed or constrained to ever achieve a meaningful increase in value. However, the economic reality within Iraq has undergone a fundamental transformation, directly challenging that outdated narrative. The country's foreign currency reserves have swelled to impressive levels, largely fueled by a sustained period of high global oil prices and a more disciplined approach to fiscal management and budgetary control. This solid financial foundation has provided the Central Bank of Iraq with greater leverage and stability, which is a key requirement for international recognition. A crucial metric that financial observers track is the gap between the official exchange rate set by the central bank and the prevailing market rate used in everyday commerce. This chasm, which was once excessively wide and symptomatic of an unstable currency, has been noticeably narrowing as the reforms take hold. Concurrently, Iraq has seen a measured easing of domestic inflation and a gradual but steady adoption of new digital payment systems, slowly displacing the traditional reliance on cash-based trade. Each of these individual steps, from stabilizing reserves to modernizing payment methods, collectively works to reinforce and build international credibility for the dinar, compelling global banks to reevaluate their restrictive stance. When a foreign currency demonstrates sustained, verifiable progress in its stability and institutional credibility, global financial players inevitably take serious notice. This recognition triggers the slow, painstaking internal process of rebuilding the technical and compliance connections necessary to facilitate its exchange. Chase Bank's quiet but thorough technical checks are a strong indication that the institution is determined not to be caught unaware should the Central Bank of Iraq's reform efforts reach the crucial stage where international exchange of the dinar once again becomes a widely feasible, legitimate operation. The focus, according to financial analysts observing the situation, is not on fueling speculation, but on the practical reality of timing and preparation. In the history of global finance, every major adjustment to a currency status begins its long evolution well before the public at large is even aware of the potential event. A multitude of macroeconomic forces are currently converging, placing Iraq in a uniquely strategic geopolitical position. The strength of the US dollar, the global push toward diversification in oil trade settlements, and the broader trend toward a multipolar financial system all contribute to the dinar's reemergence as a currency of interest. Iraq's energy resources are vital for key markets in Asia. Its substantial national reserves are increasingly underpinned by strategic partnerships with powerful regional nations, and its modern monetary policies are now visibly reflecting cooperation with both the International Monetary Fund and the established standards of the US Treasury. If Iraq maintains its current course of fiscal discipline and structural reform, The possibility of a controlled appreciation or a formal revaluation of the dinar transitions from a long-held hope to a viable policy tool within the central bank's toolkit. For a premier institution like Chase Bank, readiness in this environment is inextricably linked to its reputation. The capacity to be fully prepared and operational before any significant market movement is what fundamentally differentiates industry-leading institutions from those who are late to adapt. The cost of being prepared in advance is low, but the potential cost of being unprepared when opportunity knocks can be measured in significant lost revenue and reputational damage. For customers who visit a Chase branch to inquire about exchanging the Iraqi Dinar, the official public answer remains the same. The bank does not currently handle that specific currency. This information is factually accurate based on the bank's operational listing. However, what experienced observers note is a subtle yet crucial change in the way these inquiries are now being handled by staff. Where once there was a tone of complete, definitive dismissal, there is now a marked sense of caution and measured response. Staff members are reportedly being advised by internal communications not to engage in speculative conversation, nor to make any promises of future action, but critically, also not to issue an outright denial of the possibility of future updates. This minute shift in the internal language and communication strategy within a large corporate banking system may appear insignificant on the surface, but in the highly structured world of corporate banking, language is often a precise reflection of internal policy and transitional planning. Chase's nuanced communication approach is evolving to align with a quiet internal expectation of potential change, moving away from a stance of outright rejection. This mirrors historical precedent seen years ago, when certain other emerging market currencies underwent a formal reintroduction into the global banking system. It functions as a foundational early signal, subtle enough to avoid market upheaval, but unmistakable to those who understand the underlying procedures of global banking compliance and strategy. The broader context framing this quiet activity at Chase Bank is the determined effort by Iraq to systematically rebuild and restore global confidence in its entire monetary system. Over the past year, the Central Bank of Iraq has implemented increasingly strict controls on the sale of U.S. dollars, significantly expanded its use of secure electronic transfer mechanisms, and actively collaborated with U.S. financial regulators. These actions are directly aimed at combating illicit financial flows and strengthening anti-money laundering controls. Such extensive and credible reforms have naturally bolstered confidence among Iraq's international partners and financial counterparties. As a testament to the success of these reform efforts, Iraq's foreign currency reserves have been reported at near-record highs, establishing a robust financial cushion that provides significant support for any gradual, policy-driven strengthening of the dinar. Furthermore, the country benefits from continued strong revenue streams from its oil exports, and its trade relationships with key neighboring nations are becoming more diversified and robust. These are not the hallmarks of an economy in decline, rather, they are the clear, measurable markers of a nation strategically preparing for a comprehensive reintegration with the global financial structure. Chase Bank's decision to initiate a silent, thorough technical review is likely a direct, risk-mitigating reflection of this palpable new confidence emanating from Baghdad. Economists closely monitoring this trend suggest that the 25,000 dinar note could soon transcend its current role as a primarily speculative or collector's item. While there is no credible expectation of a sudden dramatic jump to historic values overnight, a deliberate, modest revaluation driven by sound monetary policy could yield substantial symbolic and practical economic benefits. Even a fractional adjustment would materially restore purchasing power for Iraqi citizens, which is a key domestic goal, and simultaneously encourage foreign corporations and investors to seriously reconsider the economic potential and emerging stability of the Iraqi market. For global banks, the essential significance of this event is not the size of the note's value, but its eventual accessibility for standard transaction processing. The moment a currency like the Iraqi dinar is formally made tradable through established standard international banking systems, it immediately gains a critical layer of global legitimacy and official recognition. When Chase Bank, or any other major U.S. financial institution, finally enables and processes such transactions, it sends an unequivocal, powerful signal to the entire global market that international confidence in Iraq's monetary future has been formally restored. The public's long-standing fascination with the dinar, a narrative often complicated by years of highly speculative internet predictions and exaggerated claims, needs to be filtered down to the underlying reality, a legitimate, grinding process of national economic reconstruction. The Central Bank of Iraq has consistently delivered a message of gradual, systematic reform, never promising a sudden, massive windfall. The crucial difference now is that the world's most powerful financial institutions are actively paying attention to the tangible results of that reform. The recent official assessments from the International Monetary Fund have been complimentary regarding Iraq's fiscal discipline and progress. Simultaneously, fresh data extracted from the country's oil exports suggests a trajectory of sustained economic growth extending through the coming years. Every one of these favorable economic indicators adds another layer of measurable possibility to the dinar's story, prompting institutions like Chase to strategically position themselves to adapt rapidly once the official green light for broader exchange appears on the horizon. The context of U.S. monetary policy continues to cast a substantial influence over virtually every emerging market currency worldwide. The ongoing interest rate decisions made by the Federal Reserve send powerful ripples across the global currency landscape. When the dollar experiences a phase of strengthening, emerging currencies, including the dinar, often face temporary downward pressure. Conversely, if the dollar enters a period of planned moderation or softening, it creates necessary economic breathing room for select other currencies to gain value organically. Financial analysts suggest that the coming year may usher in a phase of moderation for U.S. interest rates, a scenario that perfectly aligns with Iraq's strategic timing and for a major bank's preparation efforts, making the current system's readiness a sound, proactive business strategy. Being prepared for such a transition is an expense that is easily justified in terms of potential future opportunity. Being caught unprepared when a market window opens is an expense far greater in both lost profit and damaged reputation. The subtle Chase Bank activity, now being called the Chase twist by some financial observers, may not generate front-page headlines today, but when viewed in historical retrospect, it could be definitively seen as one of the first critical actionable clues of a much larger impending financial transition. Every major financial entity is bound by strict compliance procedures before it can take any steps that might attract unwanted regulatory attention or public scrutiny. By quietly and methodically checking its internal frameworks for the handling of currencies like the dinar, Chase Bank is essentially positioning itself as compliant and ready ahead of the curve. This is not based on speculative rumor. It is the fundamental standard operating procedure for a complex banking system that is required to anticipate tomorrow's financial realities. Should the dinar achieve full formal recognition and tradability, if and when that pivotal moment arrives, those banks that prioritized early preparation will already possess the complex, established technical mechanisms in place to process exchanges without chaotic delays or regulatory breaches, gaining a distinct competitive advantage in the process. Beyond the critical technical and policy aspects, this entire narrative carries a profound emotional weight for millions of people, both within Iraq and across the global community, who have waited many years to see the dinar regain its market value and international respect. For the Iraqi people, a strong dinar is more than just money. It is a powerful, tangible symbol of national sovereignty, stability, and post-conflict recovery. For foreign investors, it represents a long-held faith in a nation's ability to successfully stage an economic comeback. When respected global institutions like Chase Bank quietly prepare their systems, it lends a crucial touch of operational legitimacy to those deeply held hopes, even if no one in an official capacity is willing to acknowledge it publicly just yet. The 25,000 dinar note, with its distinctive design and deep historical ties, is slowly but surely moving through a transformation, potentially evolving from a token of speculative interest into a fully functioning, legitimate component of modern global finance. Experts consistently caution that all major currency transformations rigidly follow the same predictable sequence. First, sustained policy reform. Second, verifiable financial stability. Third, successful international cooperation. Fourth, internal technical readiness. And finally, the public conversion or revaluation. Iraq is demonstrably progressing through each of these complex steps with focused determination. Each positive report from the IMF, every cooperative statement from the US Treasury, and every new trade agreement signed with a major partner adds another layer of essential credibility to the dinar's stability. As this credibility solidly builds, the systemic pressure to artificially keep the dinar significantly undervalued gradually begins to erode. When the fundamental economic indicators align in this manner, experience shows that the final, decisive change in currency status often happens far more swiftly than anticipated. For now, the situation remains a waiting game, but it is a period of active, meaningful waiting, not an empty void of hope. Every quiet, technical adjustment undertaken at the operational level of a major international bank serves as an undeniable piece of evidence, suggesting that tangible progress is in motion. Chase Bank's apparent internal readiness is a direct reflection of the quiet, growing confidence that is slowly but surely returning to the region's financial outlook. The core lesson remains that this is not a story fueled by speculation, but one driven by meticulous corporate preparation. No official at the bank will publicly confirm anything because major institutions operate strictly on regulatory compliance and proven data, never on unverified rumor. However, financial systems, in their complex nature, inevitably leave verifiable fingerprints, small, essential software updates, subtle code revisions in transaction processing systems, and specialized internal communications that clearly show the immense machinery of operational readiness is turning deep in the background. Those dedicated financial analysts who monitor such minute, intricate details are clearly seeing a pattern solidify. This is not market hype, it is the visible construction of financial infrastructure. For those who currently hold the dinar, sustained patience and constant, informed awareness remain the two most essential virtues. There is no guarantee of an immediate policy change, but the powerful indicators are aligning in a coordinated manner. The global financial landscape of today is markedly different from just a few years ago. Major shifts in how global oil trade is settled, the dramatic expansion of digital banking services, and substantial shifts in geopolitical partnerships have fundamentally influenced international currency strategies. Iraq, positioned strategically between the powerful economic blocs of the East and the West, has successfully leveraged these dynamics to its advantage. Its currency may soon begin to reflect that growing, hard-won strength and stability. When that pivotal moment finally arrives, banks like Chase, having invested in their preparatory systems, will be fully equipped to act immediately and efficiently. Until then, every vigilant observer, from seasoned analysts in global financial hubs to determined traders in Baghdad, will continue to scrutinize the small, subtle signs of internal movement. Sometimes the clue is merely a new line of code in a financial database, or perhaps a slight change in the formal tone of a teller's response to an inquiry, or a newly inserted clause in an internal compliance report. These tiny, disparate details, when correctly combined and analyzed, form the true narrative of the dinar's trajectory. The internal Chase Bank movement surrounding the 25,000 dinar note is one such critical detail. It is subtle enough to be completely overlooked by the general public, but it is precisely the kind of procedural step that may one day be viewed in hindsight as a historically significant precursor. As this multi-layered story continues to evolve, one core truth is becoming undeniably clear. The long era of financial dismissal regarding the Iraqi dinar's potential may be drawing to a definitive close. What appears to be replacing that dismissal is a phase of measured respect, a respect grounded not in long-shot speculation, but in the central bank of Iraq's documented sound economic progress and verifiable stability. Chase Bank's continued official silence is likely not a sign of secrecy or denial, but rather a reflection of corporate discipline, the kind of deliberate operational discipline that consistently precedes the launch of a significant new financial chapter. The official world of high finance will not mark this turning point with any great public fanfare. It will arrive quietly, as exchange numbers officially align, as complex technical systems complete their final updates, and as a sovereign nation fully regains its economic balance and international standing. The 25,000 dinar note, a note once seen by many as merely a symbol of what the nation had lost, may soon stand as a powerful symbol of what Iraq is comprehensively rebuilding, brick by economic brick. Thank you for joining us tonight on Dinar Shift. We will continue to maintain our close monitoring of these critical, quiet developments at Chase Bank and track the broader movements across the global currency markets as this essential story continues to unfold. We urge all our viewers to remain informed, to stay alert to these subtle indicators, and as always, to approach every piece of financial news with a necessary balance of both curiosity and grounded caution. Because, as is often the case in the complex world of finance, the most powerful and meaningful shifts rarely, if ever, begin with a sudden, attention-grabbing noise.